All right, now we're going to get into listener questions. All right, here we go. The first one is, I run a home service business, mostly residential cleaning and small commercial contract. I started 4 years ago, and it was just me at first, but now I've got 5 employees and steady reoccurring clients. Last year, the business did about $750,000 in revenue. Good on
Great.
you. And after expenses, I cleared around $220,000. I'm still operating as a single member LLC, and my CPA basically just files my taxes once a year. Sounds like a great CPA. I keep hearing people talk. Hey, look at this. I keep hearing people talk about S corps, payroll, and tax planning, and I'm starting to worry that I'm overpaying and exposed to something I don't understand. At this level of income, what should I actually be doing differently? Fire your CPA.
Yeah, that's pretty gross. I think, man, you're probably, I hate to say this, like salt in the wound, but you've probably been like overpaying by 50 to 80 grand every year. That's so, yeah. Get rid of that CPA. Find someone who will help put a plan together. But even for 2025, you can go back because you have the LLC set up. You can go back and do a late S corp election and get the payroll. That employee hat piece is going to be tricky, but you can do it. Don't listen to anyone that's going to tell you can't. And if you need to, you can we're still in January. Payroll reports are not final yet. You could squeeze in a payroll if you needed to for the first year. You could even give yourself a 1099 for that employee hat. Anyway, that S corp is the biggest thing that
Okay.
would change your whole world. And then from there, there's probably a whole bunch. If that's being missed, there's probably a whole bunch of conversations that should be had around deductions and just maximizing that and trying to pull that profit down. Take money that you're already spending anyway and see what we can classify as legitimate business expenses to pull that profit down.
Perfect. The bad news is, because we had to wait for this question, that was 2 years ago he wrote that. No, I'm just joking.
There's another 130 grand.
Minimum, right? Like, it's probably even more than that.
Yeah,
All right, next
probably.
question is, let's see. This year was the first time my business really took off. I run an online consulting company, and my income tripled, but I didn't change anything. I just kept pulling money out when I needed it and paying my normal monthly bills. Now it's January, and my CPA is telling me I might owe 6 figures in taxes. And I honestly don't have that sitting in cash because I reinvested it into ad software and hiring. What are people supposed to do in this situation? Did I mess up permanently, or is there a way to fix this when you get surprised with a big tax bill?
Well, the answer is probably the same. So one, don't file this theoretical tax return. If it exists as a draft, fine, leave it. Go get another opinion. You can. It's almost the same answer. One, I'll bet that a big part of that reason is that you're still set up as a single member LLC, a sole proprietor, and so if you have the LLC, a late S corp election would make all the sense in the world. And then if you've been reinvesting that into payroll and advertising and things like that, I wonder if there's like a tracking issue, because those should be expenses. And so a 6-figure tax bill
That seemed way
means
high.
a whole lot of profit, right? So you probably have about 400,000, 400,000 at least in profit. May be the case, but I'll bet if you really go through that with a fine tooth comb, and again, have that same just like good, thorough review of where might you be spending money personally that we could justify it as an ordinary and necessary business expense. Let's pull, this would be a great time to pull in vehicles. This would be a great time. We're looking for big ticket items to pull that business profit down as far as we can for tax purposes.
Man, gosh, the more you know. Um, I guess with like one last question for you. How often is it that so those are just 2 examples of what sounds like bad CPAs. How often do you like onboard people who are like oh my gosh, you've been uncared for, unattended to.
It's almost everyone that we onboard is like that.
Always.
And these are like real successful business owners who have sold businesses, who have, like it's kind of a disgusting amount of money that has has been lost. But it's more common than you'd think, because most accountants are just like, that's how we're trained to do it. Like the engagement is the tax return. And so then it's like everybody's well intentioned. Everybody's thinking, okay, what can I do to try and save money on the tax return? But really, it's just all you're doing at that point is just reflecting what already happened, and there's not that much they can do. And then the clients will come and ask the question and say, what can I do to save taxes? But accountants are still thinking just in terms of the tax return. And they're like,
File the return.
yeah, you paid me for the return. I delivered the return. Now you want me to spend hours here in the middle of July to think about what you might be able to do. And they're just not set up to charge that way. They're not set up to think that way. And so those questions, I say that out of personal experience, because that's how I started my firm. Is like, I would get those questions and it's like, geez, come on, what do you want me to do with this? And it, eventually the light went on, and I was like, oh,
You
that
started
needs to
doing it.
be this, that's the engagement. And the tax
So
return
then
is just the,
so then a very easy way for a person who's listening to this to be like, is my CPA good or not? It's, do they just file a tax return for you, or do they strategize? Or
yeah,
sorry,
like what, yeah,
or and
what
or
are you paying
strategize.
for? Because if you're only paying for a tax return and they're telling you that they're going to give you strategy because they know that's what you want to hear. And again, they're probably well intentioned, but if you're not paying for tax strategy, then you're not getting tax strategy. You're getting
Return.
the return that you're
I
paying.
mean, at that point, should you just use TurboTax if you know,
I think TurboTax is pretty good.
yeah,
Like
yeah,
it,
yes,
it's just putting numbers in boxes, and I'm not opposed to people using TurboTax. The more important thing, if you could only pay for one thing, you could pay someone to do strategy for you, and then you figure out the tax return that reflects that strategy. You'd be way better off paying money just to have someone figure out, help you with strategy.
right. All right. Well, thank you, Brian, for being on the podcast with us. I hope everyone learned a lot. I hope that you're all taking notes. And if not, just keep rewatching this video. We need the views. But if you have questions, submit those to unsexybusinessmen@gmail.com, or any comment on any of our posts or anything like that. But yeah, thanks, man. I appreciate you. Appreciate you coming out.